Tesla closed the day at 371, down 5.34% on heavy volume, marking one of the most significant single-day pullbacks since the May-June rally. Today's price action reflects a decisive rejection from the 20-day moving average, 321.79, confirming near-term weakness after the failed attempt to reclaim the upper Bollinger Band last week. The sell-off pushed Tesla directly into the lower Bollinger Band zone, 291.46, and violated the key support shelf at 305 to 308, shifting the momentum back in favor of the bears. As Tesla continues to trade within a volatile range, traders and investors alike are closely monitoring key technical levels that will determine the next directional move. The stock has recently slipped below its 20-day moving average, with downside momentum accelerating after a rejection from the 321 zone. Below are the updated bearish and bullish thresholds to watch in the coming sessions. Technically, the stock is now trapped between two critical zones, below the 20-day moving average and just above the rising 200-day moving average, 313.64. The MACD has flipped negative with a fresh bear cross, while RSI sits at 41.42, suggesting there is still room to fall before hitting oversold territory. Momentum favors continuation lower unless buyers step in with conviction above 305.53, which was the last intraday lower high before today's drop intensified. Until Tesla can reclaim 305.53 with strength, the trend favors a drift lower, with the 200-day moving average acting as the final line of defense. Watch for a potential bounce off 293 to 295 in the short term, but if that fails, the downside could accelerate quickly toward the 280s. Tesla remains vulnerable to further downside as long as it trades below 305.53, a breakdown shelf that now serves as a key resistance. Any bounce that fails to reclaim this level should be treated with caution, as the broader technical structure favors sellers beneath it. 305.53 is the breakdown shelf. Any rally below this level is likely to fade. 297.48 is the first confirmation zone for a continued breakdown. 293.21 is the current session low and a major support level. If broken, expect a sharp extension lower. Should Tesla lose its footing below these supports, the following downside targets come into play. 284.74 is a key confluence of Fibonacci retracement and intraday pivots. 274.16 is a nearby unfilled gap that could act as a magnet for price. 268 to 264 is a broader macro retracement zone with historical relevance. 233 is the projected downside from the point-and-figure P&F triple bottom breakdown pattern. On the flip side, any bullish thesis must begin with a decisive reclaim of 305.53, which marks the top of the current falling wedge structure. Without volume and follow-through above this level, any upside move is likely to fail. 305.53 is initial resistance and falling wedge ceiling. Reclaiming this opens room for upside momentum. 308.24 is key 30-minute pivot level. Watch for acceptance above this to confirm strength. 312.31 is former support turned resistance from the last consolidation phase. Bullish confirmation above 370.27 is our trigger to load calls. A move above this zone invalidates the bearish setup and opens the door for a potential rally toward 330 plus. Until these critical levels are breached in either direction, traders should remain flexible but cautious. Tesla is coiled tightly near key inflection points, and the next decisive move will likely set the tone for the rest of July. Tesla closed the regular session at 317.66, but after-hours trading has already dragged the stock down to 309.80. That drop brings it right into a critical support confluence on the daily chart, where the 50-day moving average at 312.82 and the 200-day moving average at 313.28 intersect. This overlap of major trend lines often acts as a magnet for buyers. Adding even more technical weight, this same zone aligns with the Bollinger Band midline and several key prior pivot levels, strengthening its role as a major inflection point. Zooming into the 195-minute chart, we see that Tesla is descending into this area of support on declining volume, a condition that typically hints at seller exhaustion. Momentum indicators are starting to signal oversold conditions as well, with the Relative Strength Index (RSI) dipping to 42.90. If price gaps below the 310 level on Monday, it could exaggerate this oversold setup and set the stage for a relief bounce. What's particularly telling is how volume behavior has changed as Tesla approached this support level. Rather than accelerating on the sell-off, volume has tapered off, suggesting that downward momentum may be fading. However, there's a catch. The MACD on both the daily and intraday charts continues to curl downward, so any bounce here may end up being short-lived unless bulls can reclaim the 325-plus area with conviction. We've got a confluence of daily moving averages, support zones where institutional whales will be eyeing this week near 308, and low-volume selling, which all suggest a potential bounce. But is it safe yet? The key levels to monitor are crystal clear. The bounce zone lies between 307.50 and 309, right where Tesla's major moving averages and a prior price channel bottom converge. If this area holds, traders may look for a move back toward 325, with a stretch target at 332. But if that support breaks, especially on a closing basis, the next area of interest lies significantly lower. A drop below 307 likely opens the door to a deeper decline toward 272.87, which lines up with Fibonacci support from the prior trend and was flagged on the point-and-figure chart. In conclusion, there's a high probability bounce setup brewing in the 307 to 310 zone. The confluence of the 50-day and 200-day moving averages, the Bollinger midline, declining volume into support, and a cooling RSI on the 195-minute chart all support the case for a technical rebound. But with momentum still favoring the bears, any bullish reversal will need to be confirmed with either a strong reversal candle or a volume surge off the lows. Until then, risk remains elevated, but opportunity is brewing. This chart highlights the remarkable trajectory of Tesla's global vehicle deliveries, showcasing explosive growth from just over 22,000 units in 2013 to an estimated 2.3 million vehicles in 2025. What began as a niche EV automaker has rapidly transformed into a dominant force in the global automotive landscape. Each year since 2019, Tesla has consistently broken its own records, more than quadrupling deliveries from 2019's 367,656 to over 1.7 million in 2024. With 2025 projections pointing even higher. This upward trend underscores not only Tesla's scaling production capacity, but also the surging demand for electric vehicles, solidifying its role as the market leader in the EV revolution. We're going to walk through key bounce levels, upside targets, and the exact zone where Tesla bulls really need to step up. Quick reminder to tap that like button and subscribe, especially if you trade Tesla like we do every week. Let's start with the daily chart. Tesla closed at 317.66, but after hours, it's already dropped to 309.80, and that level matters more than you might think. Why? Because this 309 to 312 zone is a critical support confluence. The 50-day moving average is right at 312.82. The 200-day moving average sits at 313.28. And on top of that, this level lines up with a midline of the Bollinger Bands and a recent pivot level. This isn't just a moving average, it's a battlefield zone for buyers and sellers. And here's what makes it more interesting. Volume has been tapering off as we approach this zone. Now, take a look at the 195-minute chart. It shows the same thing. The pullback into 309 has been on declining volume, which is often a sign of weakening sell. Thanks for watching. And trade safe out there. SI on this time frame dipping to 42.90, suggesting the stock is approaching short-term oversold levels. If Tesla bounces at the open, it wouldn't be surprising, especially given the magnitude of this pullback and the fading bearish momentum. So what are the levels to watch? Bounce zone, high probability. 307.50 to 309 is the sweet spot. That's where multiple technical layers converge, the 50-day, 200-day, and price channel support. Upside bounce targets. First target, 325. That's where recent resistance capped price twice. Then watch for 332, which is a pivot and upper Bollinger Band level on the 195-minute chart. If bulls really push, 353 to 355 is a breakout magnet, but will need serious volume to get there. Must hold level. If 307 fails on a closing basis, things could get slippery fast. We'd likely head toward the fib retracement level at 272.87. That's the 61.8% retracement from the entire March to June move and a huge level to reload swing longs. Buy zones on deeper dip. First dip by 272 to 275. Major support 221.86. That's our long-term support from the March base. Chart 1 confirms it. So to sum it up, Tesla is pulling back into a critical daily support zone at 309. Volume is drying up, suggesting sellers are losing steam. There's a good shot we get a bounce, but bulls need to defend 307. If they fail, eyes on 273, then 221. Drop a comment if you're trading this move, and let me know your bounce or breakdown strategy. Make sure you're subscribed. I'll be updating these setups in real time.